Hello everyone and welcome back. My name is Greg Furman and these are the market positions for November the 28th, 2017. Now our first trade for tonight is going to be in the Forex market. We're looking at the New Zealand Japanese yen cross pair. Now this is again a counter trend long position, very volatile one potentially, but we can see that the VantagePoint indicators are starting to roll over to the top side and the yen may be running out of steam. So when we look at our medium term crossing over our long term predicted difference to the upside, we have our strength indicator and our neural index both turning higher. We've moved into an oversold condition. We can see before many times that this has happened. It doesn't necessarily mean that the market's going to turn around and go higher, but it's usually a good indication where we can see a multiple point bottom here and then combining that with an oversold condition and of course a strong signal from VantagePoint. So when we've seen these signals before here, guys, we look for repetitive positions. Now the beauty of the Forex market versus stocks, futures, it's very repetitive on a month-to-month basis. So what it appears to me is that we have a very similar signal forming here. Now, if the global equity markets sell off, that is absolutely going to be a problem for this particular trade. The yen, again, is still relatively strong, surprisingly, with the S&P 500 at 2,600 or more. So when we're looking at this right now, our first key obstacle that we have to take out is the 8-day predicted moving average from VantagePoint. That comes in at 76.85. We then can target 77.45. Ultimately, that's the target we're going for, is the 77.45 area. It's just a question of whether we can push through this 8-day predicted moving average, but it looks by the indicators, the short-term to medium-term indicators from VantagePoint, that that is going to happen. Now, support is very clearly identified here, guys, below 76, so we know exactly where to put our stops. We're looking for the medium term and long term predicted difference to continue to push higher with, of course, the neural index and the strength indicator. So from here, all we have to do is go into that all-important daily report. Now, with that close today, for tomorrow, we're looking for a very minor pullback to 76.57. We then initially target 77.16. Now, if we can get up to 77.16, that should open the door to 77.45. If the pair is going to fail, that's where it's likely going to be. But once again, we want to see a push above 76.85, this 8-day predicted moving average from VantagePoint, to get this trade in motion. But if we can break through those levels that I talked about, then we've got a real shot of hitting this upper trend line. So when I draw my trend line in here for everybody to see, that area is now currently coming in at about the 78 level. So just understanding our upside target points, 76.85, 77.45. If we can break through that area, that opens the door to 78. If we can take out 78, that would open the door to about 79. If we break through 79, that's going to target back up towards the 81 level. So it's always good to have targets on the upside and also have very clear areas where your stop needs to be. Now, that's our first trade for tonight. Now, our second trade for tonight is going to be in the U.S. technology sector. What we're looking at here is the Diebold stock, the DBD. Now, we can see that we've got a bit of a channel running here on this particular stock. When we look at this, we've closed basically about 3 days above this key VantagePoint 18-day predicted moving average. That's coming in at 1861, followed by 1846 and 1884, with a bullish close of 1895 above all three of these key VantagePoint predicted moving averages. That in itself is a moderately bullish signal. Now, when we look at our neural index, we've switched from a negative to a positive, from 0 to 1. Our predicted short-term and medium-term and long-term predicted differences all holding firmly above the 0 line. We have what I would call a very nice clean crossover on the predicted MACD, albeit still below the 0 line. And our predicted RSI is coming in at 56. Which is not perfect, but it is showing that we've got a little bit of momentum building here. Of course, coming out of this heavily oversold territory here. what appears to be a pretty firm bottom in at $16 per share. But what we're looking for here, guys, is for this to start to accelerate to the upside with a bit of momentum. So when we look at our short-term crossover, we can see that it's starting to look good again. Medium term looks very good. And our long-term crossover, that's the money maker, so to speak, here, guys, that we want to watch, with a lot of activity around 1855. So once we've done all of our checks, then and only then do we come to the daily report. In that daily report, with that close of 1895, we're looking for a minor pullback to the area that I just showed you guys at 1858. We then target 1916 for the initial move. Now, if we can break through this congested area of resistance right here, and by the looks of the indicators from VantagePoint, we have a real shot at that. Once we break through 1920, that should open the door back up towards this $22 per share mark, potentially even higher. Now, the very minimum stop I would have here, guys, is below what I can see is a pretty known channel. We could go up a little bit higher here for you day traders and maybe put it at about 1770. But I wouldn't go less than that. So if we're playing this tight little channel here, based around the indicators from VantagePoint, the top part of this channel is likely to break. But if it doesn't, and we start pushing below 1870, if we start pushing below 1750 per share, all bets are off on the top side, and chances are that this stock is reversing lower. So with that said, these are the market positions for November the 28th, 2017.